What's up and welcome back to the We Are Investing channel, a channel that's dedicated in investing and personal finance. On today's video, we are going to go over stocks that you should add to your watch list, if not open positions in for a swing trade, because I think they are going to make you money. And these are stocks that I am invested in. So with that being said, we're going to take a look at the portfolio, see how it performed over the last week and over the last month. I'm just going to let you guys know that this week was a good week and this month has been an awesome month. We have crazy returns. Now, before we proceed into the video, please consider hitting that subscribe button, ringing that bell, and smashing that like button. Turn that baby blue. And also be aware that there is a Patreon page where I notify members as soon as I make any trade or investment so that you can follow my moves in real time. There is a link provided in the video description down below. So with that being said, let's proceed in today's video. Oh, and one more thing, it's Saturday, so we're going to be drinking a beer on today's video as well. We are going to be sipping on a BrewDog Clockwork Tangerine IPA. Let's crack this bad boy up and proceed with the video. Alright, so this week the portfolio increased by $7,280.26. The top performers of this week include Callaway Golf, ticker symbol ELY. You guys know why I'm bullish on this stock. I've done videos on them before, and I'm definitely very bullish on Callaway Golf. They're a great stock. Also, CVS started to perform for us. This is a trade that I like because of the vaccine. We are up $4,309 on that stock. We also got some money on Macy's. Now, we were down on that stock initially. This was a pick that I had last week. This is a way that I'm going to gain exposure to retail during the holiday season. There's a very high short interest on the stock, so there is a potential for a short squeeze. And we sold out a Docusign for a 1,000 gain this week. However, we made much more on that stock over the last month. We'll get into it on this video. We opened up a day trade in CiIC, which is a SPAC that's going to merge with Arrival. We made $1,000 on that day trade in just an hour's time. Super volatile. I did not want to hold it for any longer. I might get into another trade with them later down the road. Now, when we take a look at the portfolio over the last week, this week wasn't all rainbows, guys. There were some bad days mixed in, but we were able to recover with some trades. We bought the dips, we averaged down, and we made some money by doing that because these stocks recovered. And we did not sell out of some stocks. They did not hit their stop loss triggers yet, and they were able to bounce back, so we were able to recover those losses. But if you look at this chart right now, you can see that on Monday and Tuesday, the portfolio was down about $1,500 on both those days. So we were about $3,000 in the red. But on Wednesday, we had a spectacular day. That was pretty much driven by Docusign, which had a spectacular day. We ended up selling before the earnings because we were up big and we didn't want to have that risk heading into the earnings report. And Friday was a good day as well. Made $1,000 on that CiIC trade. So speaking of Docusign, ticker symbol DOCU, we got into this trade on November 10th and we sold on December 3rd. So just around a month's time, we made close to $7,000 off of this swing trade. Now, Docusign is one of these companies that I think is going to be extremely strong moving forward. I think they're going to maintain their momentum as a company. The stock might see a pullback because the valuation might be a little rich and it could get mixed in with other stay-at-home stocks that potentially won't have the same impact post-pandemic as they are having now. But Docusign, in my personal opinion, is a business that is here to stay long-term. They're not going to see a pullback in sales, in activity within the company like a Peloton or Zoom might see once people start going back to work. Now, a stock that we opened up a position in and we're actually losing money on this trade right now, but we're still holding. I still believe there's room for this stock to go. I still think it's going to bounce back and I still think we're going to make money off of this swing trade. That stock is Palantir. I've done videos on this stock on what I think is good entry prices. But anyways, we're down 0.82% for a negative $197.50. Now, looking at the chart, you can see why we got into this trade. Because the stock was beaten up it dropped off a couple reports from analysts downgrading the stock, reducing the price target for Palantir, not because the business isn't good, because the stock has run up too much in their personal opinion. Now, this is one of these stocks that has a ton of backing from Robinhood investors. There are so many YouTubers that make videos on this stock daily. It definitely has that pump crowd. There's a lot of volatility. There's a lot of volume. But because of that volatility, you can make money off of a swing trade. You can make money trading this stock. Now, if you zoom in on the charts right now, we have a support at $21.15, and it bounced back a little bit from there. But the next move that needs to happen for this stock to gap up is we need to break that resistance at around $25.10. And if the stock drops below the support line, which is around $23, we could start to drop even more. But I see a potential for a breakout in Palantir if we break that resistance line, because the next gap up is at around $28. We could even hit $30, and we could continue to gap up, make new highs, and this could be a great swing trade because your potential for reward is very high and you have an identified support line which minimizes your risk. So if the stock drops below that support line, you have to consider selling your trade because there is downside. But because we identified that support line, we are managing our risk for this trade. Now, we talked about CiIC and how we got into a trade and made $1,000 off of this trade in just about an hour's time. Now, let me explain to you what I saw with this trade. So in pre-market hours, the stock ran up. We had a decent increase in pre-market hours on Friday. When the stock opened up on Friday, it dropped immediately, but it bounced back. And then in the bounce back, we broke those pre-market highs. So what that indicated to me was that there was a possibility that this stock was going to be setting higher highs and higher lows. Because even after we broke that pre-market high, the stock dropped again, which is very typical. It hit a resistance, then it started heading down. But when it bounced back, that support line that it hit the second time was higher than the support the first time around, indicating higher lows. And we bounced back and we had higher highs. Then the stock started to go, and at $30 that was a hard resistance, and $33 was even a harder resistance. Now, I did not sell at $30 because I thought there was a chance that it would break $30, and I was playing with house money. I was willing to gamble some of that gains to see if the stock was going to go over $30. But we sold when the stock started to consolidate, and during that consolidation, the stock was setting lower highs and lower lows, indicating to me that the trend was starting to reverse and it was time to get out of this day trade because it was only an hour's time. So it wasn't a bad move. We made a decent amount of money in just an hour's time by checking out the daily chart and just using simple support resistance lines for our strategy. It's not hard to do. I explain it a lot of times in these videos, and I explain it on my Patreon whenever I make a trade, what I'm looking at, when I plan to sell, my strategy for each individual trade, which you will have exposure to if you join the Patreon page. The next stock that we bought was Salesforce.com. Now, we are down on this trade right now. We're down 1.35% for a loss of $386.25. Now, Salesforce trades under ticker symbol CRM. And you can see by looking at this chart, they had a drop following the earnings. It was not the earnings of the company that was the problem. Investors did not like their huge acquisition of Slack. It was a very expensive acquisition, and the CEO told investors that they weren't really looking to acquire another company. However, I think that this reaction from the stock market is wrong. I think it's an overreaction, and I think that Slack is actually a really good acquisition for Salesforce.com. I think it's going to improve their business, it's going to improve their product line, it's going to expand their products to more people, it's going to increase their total addressable market, and it's going to make them a better competitor to Microsoft. A lot of us don't know what Salesforce.com is because we do not run a business and there's no need for their products. However, I think that that's going to change a little bit with the inclusion of Slack into their product line. Very interested to see what the company does, how they combine everything together, but I think that there is potential here. This is a very solid company. This is not a risky company by any means. They have great revenues. This is a well-run company, and I'm going to buy it on the dips like I did. And this is why I think it is a good stock to enter into either a long-term position, spread out your cash over time if you plan to invest long-term, or even a swing trade because there's a lot of upside potential while we are reducing our risk here. I like the risk reward ratio when it comes to CRM. Now guys, that wraps it up for the stocks that you should be watching right now. Let's just end the video on how the portfolio has performed over the last month, which I said was a phenomenal month at the beginning of this video. We are up $42,440. Now we achieved this by trading stable stocks that have low risk. Risk management is one of my favorite things when it comes to the stock market. As a trader, as an investor, you're not always going to be right. But when you are wrong, you do not want that wrong decision to completely destroy your account. That is why I never recommend putting a ton of money in one trade, because yeah, you might be right a couple times, but it only takes you being wrong once to completely wipe out your account. And that is why when you trade speculative stocks, when you invest in speculative stocks, your position size should mirror the risk included with investing in those kinds of stocks. So I prefer swing trading companies that I like that do not have a lot of risk associated with them, because no one is perfect. We cannot always be right. We are right way more than we are wrong. But when we are wrong, it does not put a huge dent in our portfolio. So with all that being said, guys, just remember that I do have a Patreon page where you can follow us live whenever we make any trade or investment. We always include our thesis, what we're thinking behind that trade, when we post on the Patreon page. But other than that, guys, thank you so much for sticking around to the end. If you liked the video, please consider hitting that subscribe button, ringing that bell, and smashing that like button. And also, there is a Facebook group and a Discord server. Links are provided in the video description down below. And one last thing before we rock it out for this video, there is currently a stellar promotion in Webull, which is a way better brokerage than Robinhood. You can take a much better look at the charts. You get extended hours trading, and through the promotion that I am providing to you through the links below, you can get 2 free stocks worth up to $1,600. And if you refer Webull to 2 friends, you would also get an additional 10 stocks on top of that, valued anywhere from $6 to $1,600 per stock. Links are provided below. Outside of that, it's been real, it's been fun, it's been real fun, and this is We Are Investing, and together we are invincible. See ya!